The markets started up for the day. The Nasdaq was up almost 0.5% to start. It finished down almost 1.7%. The Dow and S&P both finished lower. Intel led the way with down almost over 6%. But the interesting part is, guys, here's the heat map for the S&P. See anything interesting? Got a lot of red in the big numbers right here in the tech area. So if you're new to our channel, on our main channel, I've always preached what drives the market up will drive the market down. Magnificent Seven make up a huge percentage of the S&P. And apart from Google for a very long period of time, it was hard for me to find value in the S&P 500. Now look at these numbers. NVIDIA, 4%. Microsoft, 2%. Apple, pretty stable here. Amazon, 2.5%. Tesla down 5.3%. Guys, you better believe. Mark this video right now. The Nasdaq, the S&P, whatever they go down, the Magnificent Seven will probably go down as a group much worse than that because it's a market cap based index. The larger the values, the more it drives up the index. And the larger the values, the more it drives down the index. That's what's going to happen here. Again, look at how much green we have over here. A lot of green. Guys, it's a lot like the tech bubble where you had a lot of big companies at the top that were very overvalued and a lot of mediocre ones down below. I own 18 companies. These aren't the big behemoths right here because I think it's just hard to find value in those. Guys, do me a favor. You're watching this video on this channel. This is our second channel of our great Everything Money community, one of 4. And I'd like you to subscribe because this is the channel in which we do 4 or 5 videos every week where we recap earnings, recap news, talk about things like this, just try to get a feel for what's out there. We're not here to rip apart companies and say, oh, what's going on here? We're here to talk higher level. Today, the new rumor on the street was that people were worried about the September Fed decision. Now, guys, just 2 months ago, there was, first off, go back to the beginning of the year. 6 or 7 rate cuts are going to happen. That was said in December of 2023 for 2024. Guys, we're sitting here in August, end of August. We've had 0 rate cuts. Now there's a 75% chance, according to the CME group, that there'll be a rate cut in September. And there are a lot of people expecting 2 or 3 cuts. Guys, I have no idea what's going to happen. But I will say this. Things change very quickly. I think about 2 months ago, we did a video in which people were banking on no chance or very little chance of a rate cut in September. Now all of a sudden it's happened. Why? Inflation's lower. But I also want to make note. They just announced that they're adjusting labor numbers of 820,000 employees less than they first thought. That means a weakening economy. I've talked about it in other videos. Target, Home Depot, Lowe's, Starbucks. A decrease in same-store sales. But Walmart had an increase in same-store sales. That to me said there was a weaker consumer. And you got to remember, consumer spending is 68 to 70% of GDP. People are being a little more cautious. They're at the tail of inflation, hurting their pocketbooks. A lot of people, credit card balances went up a lot. I'm not here to be a fudster. I'm just here to talk about the reality. The reality is we're sitting at sky-high valuations in the stock market, which I'll get to in about 1 minute. So do me a favor. Subscribe to the channel, get more of these videos, get a good understanding of what's going on out there. When times are worse, I'll probably be speaking optimistically. When times are way better, I'll be speaking with caution. Doesn't mean sell everything. Your job is a dollar cost average. Now, this is my stock market to GDP ratio. Goes back to 1928. And if you recall, Warren Buffett calls this at any given time the most accurate indication of where the stock market is from a valuation perspective. Now, there's going to be a lot of people out there who throw out reasons why this thing is obsolete. I don't believe it. Well, what about companies that make money abroad? Okay, then look at GNP. They're within 1% of each other. At the end of the day, this has over time been one of the most accurate representations of stock market valuation, and we are 107% overvalued at this time. I just came back from my wedding, a 2-week trip for my wedding in Ireland, and before I left there, this was at 92%. And then the markets went on a tear. Now it's at 107% overvalued. Guys, the more you pay for something, the worse you're going to do. Does this mean sell everything? No. What this means is keep dollar cost averaging and be ready for volatility. I repeat this over and over to everybody in our community and everybody on Twitter. Guys, I'm very active on Twitter. I love talking about these things. If If you want to keep engaging with me here, I just passed 9,000 followers at EM Paul G. I will sometimes talk about the stock market GDP. I've only been around for a little over 2 years. I have 4,600 posts. I'm very active. It's a great place. And if you're part of our Everything Money community, direct message me on Twitter. Tell me your username in our community as well as your email address, and I will follow you back. Because at some point in the future, I'm only going to allow people to comment who follow me on the channel. So make sure you do that. That's coming in the future. I love doing polls. Guys, the markets are nothing to be afraid of. Your understanding of the markets will make you a more confident person. Seeing lower prices will be better. But I look at this heat map, guys, and it actually makes me feel good. I go, guys, look at all this green here. So many companies are green. Now, guys, I'd wish this whole thing was red and the market had gone down 10% today. Yes, I'm a sociopath. By all means, call me that. But when I see these valuation metrics, these companies that I think are hard to value, I look at these things saying, I don't know how you justify these prices today, and they're down big. The more speculative something is on the upside, the worse it's going to go on the downside. You look at crypto. I was just talking upstairs with Dalton, who's one of the guys who works for us. We found through the community. Talking about NFTs. I'm like, remember NFTs? No one cares about those things anymore. People are paying, NFT prices are down 97%. 97%. Nobody talks about it anymore. The funny part was, I thought NFTs had a better argument for value than crypto. Yeah, that's a crazy statement. I get that because crypto's still up a ton. I think when we finally have the washout, crypto in its current form will not exist in its current form today. It could very well exist in the future, but it's got to be back some other way. The funny part is I see on Twitter all these people. And I have by the way, guys, on Twitter, I actually have a wonderful bookmark called Bitcoin and Hype Morons. And I have a lot of tweets in those. Why? Because I look at people when they say irrational things like, oh, the dollar is being devalued, have Bitcoin. Well, aren't you trying to convert Bitcoin to those very dollars that are devalued? Maybe it's still a hedge. That's fine. I get it. Just like gold. I get that. But people were criticizing gold at $1,600 or $1,700 an ounce. Now it's at $2,500 an ounce. I don't know. These are the things we try to have a conversation about. I just look at crypto and I look at some of these companies at these nosebleed valuations. NVIDIA. Guys, NVIDIA makes a lot of money and they've grown a ton. Is this a permanent plateau for NVIDIA? Or is this something that might fluctuate a little bit? It's not like coming off of COVID. Remember when we came off COVID, shipping companies used to charge $5,000 for a container to come from China to the US, and they charged $25,000. We always warned, guys, that's temporary. I don't know if this is temporary or not. NVIDIA could be on a start of something huge that takes them to a nosebleed level of revenue. But I will be honest about one thing here, and I was actually a hard time believing this. Amazon. Guys, this thing has been flat for 4 years. The stock has gone nowhere for 4 years. When somebody first told me that on Twitter recently, I was like, come on. I looked it up. I'm like, oh my gosh, they're right. It has gone nowhere in 4 years. But in that 4 years, revenue has gone up 55%. Profit's gone up over 100%. Yet the stock is flat. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. I'm going to repeat these simple things over and over, and you should enjoy that. Because guess what I do every day? I read articles, I read quotes that are all the same thing. If you look at my bookmarks, I have quotes here. Guys, and these quotes are all very simple things. I love Investment Wisdom. He's great. But all the same things over and over again. I don't think investing is complicated. I don't think it should be complicated. What I think it should be is a way for you to understand the world. And that's all I'm trying to do here. So guys, 2 things. Subscribe to the channel if you want 4 or 5 great videos a day. And subscribe, follow me on Twitter. I'm very active there. And just say hello. Thanks for your time.